Success is not a destination, but a journey that you patiently build step by step in Forex trading. This statement holds even more truth. On the challenging path to conquering the financial market, have you ever asked yourself, am I on the right track? The answer sometimes doesn't lie in short-term profits or losses, but in the persistent changes in mindset and how you grow through each trade. Imagine a great river with winding curves. It doesn't flow straight, but each twist and turn brings it closer to the sea. A trader's journey is the same, full of bends, sometimes dead ends, but every mistake is a valuable lesson, and every failure is a step forward on the road to maturity. And if you've learned to maintain faith and discipline, congratulations, you're getting closer to success. But before we dive deeper into the signs that show you're succeeding in trading, hit the subscribe button so you won't miss any valuable content from our channel. If you find this video helpful, please give it a like and share it to spread the message to more people. Don't forget to leave your thoughts in the comments. Your stories are the inspiration that keeps us creating. I once heard a story about two hunters. One spent the entire day chasing the fastest prey, roaming the forest, but caught nothing. The other patiently waited in a quiet corner, observing carefully and acting only when the timing was perfect. At the end of the day, who succeeded? The answer is clear. In Forex trading, are you the first or the second hunter? Success is sometimes as simple as learning to sit still, wait, and act purposefully. The best traders aren't those who make millions overnight. They're the ones who understand the unpredictability of the market, knowing when to move forward, when to step back, and most importantly, when to listen to themselves. Because Forex trading isn't just a battle between you and the market, but a deeper struggle between you and yourself. Perhaps you've heard of fear and greed, two uninvited companions in every trade. We fear losses but can't resist the allure of big profits. In this struggle, successful traders are those who learn to befriend themselves, controlling emotions rather than letting emotions control them. And by doing so, you're not only a winner in the market, but also in life. However, this journey is not for the impatient. It requires you to train, fail, and above all, accept that success doesn't come from chasing the Holy Grail or a perfect trading method, but from understanding who you are in this market. A soldier going into battle with shiny armor, but no understanding of the battlefield will never win. Similarly, a trader loaded with complex indicators, but no grasp of how the market operates is no different. The signs of success aren't the flashy things you can show off on social media or to friends. They're the small, subtle, yet powerful changes. They're when you realize that failure no longer knocks you down. They're when you're calm enough to wait for the market to present an opportunity instead of jumping into any trade. They're when you feel content with a small winning trade rather than risking it all for big profits with high risks. A philosopher once said, "We cannot control the wind, but we can adjust the sails." Forex trading is like steering a boat in a turbulent ocean. The market will always change, but what you can do is adjust your mindset, strategy, and expectations. With each adjustment, you get closer to success. So, are you ready to recognize the signs that you're on the right path? Let the insights in this article help you see that success is not a destination to rush towards, but a journey you courageously and steadfastly walk every day. Now, let's explore the 7 signs that show you are succeeding in your Forex trading journey. 1. Developing a clear trading plan and strictly adhering to it. In trading, a plan is not just a set of rules and strategies, it is a compass guiding you through the complex maze of the market. A clear trading plan serves as a daily reminder the market is always moving, always changing, but your principles should remain steadfast. Have you ever asked yourself, why did I enter this trade? Why did I exit that one? If the answers revolve around fleeting emotions or a sudden hunch, that's not trading, it's gambling. A successful trader knows that every trade must be based on a predetermined plan, not on whim. Because when chaos arises, only the plan can anchor you, helping you stay composed. I once heard a story about a young sailor facing his first storm. He panicked, running back and forth, trying everything to keep the ship afloat amidst the raging waters. But the old captain sat calmly, observing the storm with a steady gaze. When the storm passed, the young sailor asked, "How were you not panicking?" The old captain replied, "Because I knew the ship had a map. As long as I trusted the map, the ship would stay on course." Similarly, in trading, your plan is your map. Without it, you'll get lost in the market's giant waves. But the plan is not something you write down and leave untouched. It's dynamic, like a sail that you must continuously adjust to catch the wind. Every time the market changes, every time you fail or succeed, your plan needs refining. So how do you build an effective trading plan? It's not a fixed formula copied from others. A trading plan must suit your time, finances, psychology, and personal goals. A good plan doesn't have to be complicated, it just needs to be clear and detailed enough so that you know what to do in any situation. Imagine a trading plan is like preparing for a deep forest journey. You bring a map, a compass, a flashlight, and water. But the most important thing is knowing how to use them. The market is like the forest, its beauty is mesmerizing, but it's also full of dangers. If you lose direction or fail to trust your prepared plan, you'll find yourself lost. One significant sign of your growth on this journey is when you're no longer easily swept away by momentary emotions. A clear trading plan helps you know when to stop, when to continue, and most importantly, it helps you escape the traps of greed and fear. Remember, discipline isn't about avoiding mistakes, it's about learning to correct them in the least painful way. Keep a trading journal. Not to boast about winning trades, but to reflect on every decision you've made, why you won, why you lost, and why sometimes you just stood still and observed without doing anything. That journal will be a mirror reflecting your journey, a treasure trove of lessons that you've paid for with money and time. But the magical thing is, when you patiently follow your plan, you'll notice a strange transformation. You no longer just seek profit in every trade, but begin to seek consistency. Profit comes later, but consistency, that is the clearest sign of success. You'll feel a sense of peace, a gentle confidence. Instead of trying to control the market, you'll learn to master yourself. And when you reach that point, you'll realize that trading is no longer a battle. It becomes a journey of self-discovery. Every winning trade, every losing trade, they all become steps leading you to a higher level of awareness. Your trading plan is no longer a dry list of rules. It's a manifestation of maturity, an understanding that true success isn't about how much money you make, but about who you've become on this journey. So, if you've developed a clear trading plan and are following it day by day, be proud. It's not just a sign of success, it's proof of your growth, a genuine trader, confident in facing the market's volatility and, more importantly, confident in facing yourself. 2. Failure is part of the process. There's something no one wants to talk about loudly on the trading journey: failure. It's like a ghost lurking behind every decision, making us afraid, even paralyzed. But you know what? Failure is not the end. It is an indispensable part of the journey. Like darkness always accompanies light, or headwinds that show you just how strong your sails are. Think back, when was the last time you experienced a loss? How did you feel? Angry, frustrated, or empty? Most of us have gone through those moments, and in those seconds, failure seems like the greatest enemy. But in reality, failure doesn't defeat you. How you respond to failure is what decides everything. I remember a story about a potter. He spent the entire day molding clay, experimenting with various shapes. But that day, every pot he made cracked in the kiln. A passerby curiously asked, "Aren't you disappointed? Why don't you give up and do something else?" The potter smiled and replied, "Every time a pot cracks, I learn more about the fire. I'm not failing, I'm just getting closer to the perfect pot." In trading too, every loss is a valuable lesson. It's an opportunity to understand the market better, to refine your strategy, and most importantly, to learn about yourself. You don't lose because the market is too harsh. Perhaps it's because you weren't ready or didn't fully understand its rules. Every failure is a reminder that the market doesn't favor anyone, and only those who are humble and willing to learn can survive in the long run. The most important thing is not to avoid failure, but to know how to use it. Failure is like a tuition fee you must pay to learn the craft and grow. But the problem is, many traders don't see losses as a cost, but as a personal insult. They let emotions take over, lose control, and try to recover immediately, leading to even bigger mistakes. But you are different. You understand that every small loss is a valuable lesson, and your job is to learn from it rather than chase the market in panic. Learn to accept losses as part of the game. Instead of staring at the negative numbers on your screen and blaming yourself, ask, "What did I learn this time? Did you ignore warning signals? Were you too greedy? Or was the market simply unpredictable?" Whatever the answer, you need to calmly analyze it like a scientist, no emotions, just analysis and conclusions. Just like a boxer, you cannot expect to win every fight. But what makes a great boxer is the ability to get up after every knockdown. You learn to block better, strike more accurately, and most importantly, not let your opponent break your spirit. The market is that opponent, and failure is the punch you have to take. But if you are patient, you'll realize that every punch only makes you stronger. Here's an interesting fact: most successful traders have gone through the most painful losing phases. They, too, have lost all their capital, felt like quitting, but instead of giving up, they learned to face it. Losses taught them how to manage capital better, build more effective strategies, and control their emotions. Failure isn't pleasant, but it is the strictest teacher you can have on this journey. So, if you are facing failure, don't see it as the end. Instead, see it as a stepping stone to go further. Every time you overcome a failure, you're not only closer to success, but also stronger and more confident. Remember, success is not about never losing, but about how you overcome those losses. A good trader is not someone who never makes mistakes, but someone who learns from mistakes and never repeats them. You don't have to be perfect, but you need to be persistent. And above all, you need to remember that failure is not your enemy. It is your companion, showing you what you need to improve to become the best version of yourself in this challenging market. 3. Maintaining patience and discipline in trading. In a world where everyone is racing, patience seems to have become a luxury. But on the trading journey, lacking patience is like willingly walking into a trap. The Forex market is not a game for the impatient, nor is it a stage for those easily swayed by short-term fluctuations. It is a hunt, where the winner is not the fastest but the most patient. Imagine a crocodile, the ultimate predator of nature. It doesn't chase its prey or waste energy on meaningless efforts. The crocodile lies still, camouflaged, waiting. Patiently, it observes, analyzes, and only acts when all conditions are perfect. When the moment arrives, its strike is precise, powerful, and leaves no chance for the prey to escape. As a trader, you need to think like a crocodile. Not every price movement is worth chasing, and not every signal is an opportunity. The most successful traders are not those who execute hundreds of trades each week. They are the ones who know that sometimes staying out of the market is more important than diving into it. They understand that trading is not a contest to see who can execute the most trades, but an art of waiting. Sometimes the only thing you need to do is sit still, watch the market move, and wait for the right moment. I once heard a story about a Zen master and his student. The student asked, "Master, how can I attain wisdom?" The old master smiled and replied, "Just sit still." Surprised, the student asked again, "But I've been sitting still all day, and I don't feel any wiser." This time, the master answered, "Because you are sitting still, but your mind is not still. Only when you sit without any desire will wisdom come to you in trading. Patience is not just about waiting, it's about not letting greed or fear control you while waiting. Only when you can wait without expectation will real opportunities appear." The Forex market is full of temptations. The charts dance, and the smaller time frames constantly emit signals that seem reliable. But you must remember, not every signal is an opportunity, and not every opportunity is meant for you. Impatient traders are often drowned by the market because they jump into trades without a clear plan, without waiting for all conditions to align. They let greed lead the way and emotions take control. The result? They become the prey, not the predator. Discipline is what keeps you from falling into the traps of the market. It's like a rope that keeps you steady against headwinds. With discipline, you'll know what to do and what not to do. You won't be swayed by the market's enticing whispers, but will remain loyal to your plan. One of the greatest challenges of discipline is learning to refuse to trade. This might sound strange, but the truth is, staying out of the market is as important as entering it. A wrong trade doesn't just cost you money, it can shake your confidence, disrupt your trading plan, and destroy your morale. Therefore, sometimes refusing a trade is the smartest decision you can make. Learn to love waiting. The market never lacks opportunities, but opportunities are only truly valuable when they align with your plan. If you feel the need to trade just because you can't wait, ask yourself, am I acting like a professional trader, or am I behaving like a gambler seeking an adrenaline rush? Patience and discipline are not skills you acquire overnight. They take time to develop, and sometimes you will fail. But every time you patiently wait for a real opportunity, every time you follow your plan instead of acting recklessly, you are moving closer to success. Always remember that trading is not a sprint but a marathon. And in this marathon, the winner is not the one who finishes first, but the one who goes the furthest. You are the ultimate predator, just be patient and act at the right time, and everything will come to you. In the world of trading, patience is not just a virtue, it is a secret weapon, a decisive factor for success. 4. You control your emotions well and do not trade based on instincts. In trading, the market is not just a place to measure analytical skills, but also the harshest test for human emotions. Every candlestick, Every price jump is a mental game, challenging your determination and self-control. If you let emotions lead the way, the market will quickly consume you, like a wave engulfing an inexperienced sailor. Perhaps you've experienced moments where emotions completely dictated your actions. When the market suddenly reverses, your heart races, your hands tremble as you manually place a stop-loss order or hastily take profits just out of fear of losing what you've gained. But later, you look at the chart and realize that if you had just been a little more patient, things could have turned out differently. That's the price of letting emotions take control: late regret and lessons paid with real money. A story I once heard about deep-sea fishermen has stuck in my mind. When strong winds arise, inexperienced sailors often rush to pull their boats back to shore, only to realize they missed a great fishing day because the storm never actually reached their waters. The seasoned fishermen, on the other hand, understand that the sea has its own rhythm. They trust their observations and experience, holding firm amidst the waves, and by the end of the day, they return with boats full of fish. The market is the same. It demands you maintain your composure, not panic when things don't immediately go your way. Did you know that every trade you make is not just a financial decision, but also an exposure of personal emotions? Greed, fear, confusion, all of them are evident in how you react to the market. But the winners are not those who have no emotions, but those who learn to master them. If you've reached a point where a losing trade no longer makes you angry, and a winning trade doesn't overly excite you, then you've achieved an important milestone. Because ultimately, trading is not a game of emotions. It is a logical puzzle. And emotions only cloud the data you need to make the right decisions. But how do you reach that state? It all starts with changing the way you view the market. Instead of seeing every trade as an opportunity to make money, view it as an experiment in a long-term journey. You cannot control the market, but you can control how you respond to it. Focus on risk management instead of solely aiming for profits. Ask yourself, how much am I willing to lose on this trade instead of how much can I make from this trade? When you ask the right questions, you will make the right decisions. I've seen many new traders place trades without setting stop-loss points. They hope the market will turn around, and when it doesn't, they continue pouring in more money to rescue the losing trade. This not only breaks their account, but also their spirit. On the other hand, the best traders calmly accept small losses. To them, every losing trade is like paying tuition to the market. They understand that no one wins forever, and the important thing is not how much you win, but how much you lose while still being able to continue. Imagine you're a chess player. In a chess game, you might willingly sacrifice a few minor pieces to achieve a better strategic position. Trading is the same. Sometimes you need to accept small losses to protect your capital and create opportunities for bigger, better trades. But to do that, you need discipline. And discipline only exists when you know how to set your emotions aside. An interesting thing is that when you focus on managing risks, profits will come naturally. When you stop obsessing over making money, you'll make smarter decisions, stick to your plan, and not let emotions take over. This is not just a strategy, but a philosophy that helps you not only succeed in trading, but also maintain balance in life. So if today you can sit still and observe the market, not rushing into trades out of fear of missing out, if you can accept small losses without letting emotions overwhelm you, then congratulations. You've mastered the hardest thing in trading: yourself. And when you do that, the market will no longer be a scary place, but a playground where you always remain calm and confident. 5. Knowing how to manage capital effectively. Capital management in trading is like controlling the flow of water through dams. A strong current that is not managed will destroy everything in its path. But when guided correctly, it can generate electricity, irrigate fields, and sustain life. Your capital in trading works the same way. If not managed carefully, it will turn into a double-edged sword, ready to push you into an inescapable spiral of losses. Have you ever felt driven by the market, where greed urged you to place a trade larger than your safe capital limit? You think, if I win this time, I'll recover everything, but the market never operates the way you wish. It doesn't care about your emotions or expectations. It only does what it always does: move according to its own rules. And when that happens, those who don't manage their capital properly are quickly swept out of the game. An old but timeless story: there was a man who walked into a casino with all his possessions. He bet everything on a single spin, thinking the chance to win big would outweigh all the risks. But luck wasn't on his side. Within seconds, everything he had was gone. This isn't just a story about casinos, it's the story of undisciplined traders who bet everything on one trade and, when it collapses, have nothing left to continue. But you're not that man. Because you understand that trading is not a game of chance. It is an art where victory comes from controlling risk, not from reckless decisions. You know that each trade is not an opportunity to go all in but a small step in a long-term journey. Effective capital management starts with understanding that losses are an inevitable part of trading. But instead of letting each loss deeply hurt your account, you learn to limit them. You set a risk level for each trade within the bounds of what you're willing to accept. This not only protects your capital, but also helps you maintain a relaxed mindset when trading. Because you know that even if you lose, you still have enough capital to continue and look for other opportunities. Imagine you are a captain steering a ship on the ocean. That ocean is the market, vast, unpredictable, and volatile. But your ship is equipped with lifeboats, and you know that even if a big wave sinks one compartment, the remaining ones are still enough to keep the ship afloat. This is exactly how you should manage your capital. Don't let a single trade determine your entire journey. Successful traders understand that they don't need to win every trade. They just need to win more than they lose and ensure that losing trades never exceed their financial tolerance. A simple yet powerful principle: never risk more than 1 to 2% of your capital on any single trade. It may sound slow, but the truth is, trading is not a sprint, it's a long-term battle. And in that battle, the survivor is the ultimate winner. Just as a wise investor never puts all their eggs in one basket, you should never risk all your capital on a single opportunity. Instead, allocate your capital wisely, diversify risks, and always ensure that you have enough resources to continue even during periods of losses. Remember, your capital is not just a number in your trading account. It is the lifeline that keeps you in this market. And that lifeline is not infinite. If you don't know how to protect it, one day you'll look back and realize you wasted it all on impulsive decisions. So, are you managing your capital effectively? If the answer is yes, then you've reached an important milestone on your trading journey. You've understood that it's not big profits that define success, but the ability to survive through times when the market goes against your expectations. And when you achieve that, you're not just a trader. You're a true financial manager, calm, patient, and in control of every fluctuation that comes your way. 6. Using few but effective analytical tools. In trading, there's a truth that few recognize: the market doesn't reward those who use too many tools, but favors those who know how to choose the right tools and use them wisely. Success doesn't lie in how many screens you have, how many indicators you use, or how much data is on your chart. Success lies in how you simplify everything and focus on what truly brings value. Have you ever seen a colorful painting that carries no meaning? A chart with dozens of overlapping indicators is just like that. Moving averages, RSI, MACD, Fibonacci, and countless other tools. We often get caught up in adding as many as possible, thinking it will increase our chances of winning. But do you know that every indicator is based on the same fundamental principles? When you use too many, you're only confusing yourself, and worse, losing the clarity needed to make decisions. Imagine a kendo fighter. He doesn't need to wear heavy armor or carry dozens of swords. He only needs one sword, sharp and reliable. That sword is not just a weapon but a symbol of focus and confidence. A successful trader is the same. They don't chase after every new tool on the market. Instead, they choose a few tools that best suit their trading style and use them consistently. Do you know that simplicity is power? Successful traders don't spend their entire day analyzing small time frames, searching for every entry point. They focus on the bigger picture, observing the main trends on larger time frames. They understand that the market is a continuous flow, and trying to predict every small wave is not only futile but also exhausting. When you look at the big picture, you'll see more clearly where the calm waters are to enter and where the whirlpools are to avoid. Just like a gardener doesn't need hundreds of tools, you don't need dozens of indicators to analyze the market. A simple but effective set of tools, combined with patience and discipline, is the key to success. Ask yourself, does this tool truly help me understand the market better, or does it just confuse me? If the answer is no, boldly remove it. I once met a new trader who proudly showed off his chart filled with the most advanced indicators. But when asked, he couldn't explain how each tool worked or why they were important. That's the trap many fall into. They think the more tools they have, the greater their advantage. But in reality, complexity only adds psychological burden, slowing down decision-making and reducing accuracy. Simplifying doesn't mean doing things carelessly. It is the art of focus. When you use fewer tools, you are forced to deeply understand how they work and how to maximize their value. This not only makes your trading more effective, but also builds confidence. You're no longer distracted by conflicting signals and can make decisions quickly and decisively. So, how do you start? Go back to the basics. Focus on simple indicators like moving averages, support and resistance, or price action. Choose one or two tools you truly trust and build your strategy around them. Don't try to predict the market every second. Spend time observing, understanding the main trend, and acting when the timing is truly right. The market doesn't reward those who try to do everything at once. It rewards those who know how to wait, how to choose, and how to focus. When you remove unnecessary elements, you not only make your chart clearer, but also free your mind, allowing you to concentrate on what truly matters: the trend. If you've reached the stage where you can look at a minimalist chart and feel confident, then congratulations. You've understood that power doesn't lie in quantity, but in quality. You've moved past the stage of trading blindly and are getting closer to the state of a true trader, one who knows that simplicity is at the heart of all success. 7. Long-term thinking and not being pressured by short-term profits. You have long-term thinking and are not pressured by short-term profits. There's a simple yet powerful saying: a journey of 1,000 miles begins with a single step. And on the Forex trading journey, that step is not just about the first trades, but also about how you perceive the path you're on. Is it a sprint? Or is it a marathon requiring both endurance and willpower? Forex trading is not a lottery ticket, nor is it a tool for becoming a millionaire overnight yet. Many people enter the market with such expectations. They rush into trades, counting every pip of short-term profit and hoping to double their account in just a few days. But the market never operates the way they want. Instead of sweet dreams, they face sleepless nights, anxiety, and bitter disappointment. But you are different. You understand that trading is not a destination for quick riches. It is a long-term journey, where each step not only brings you closer to financial goals, but also offers opportunities to learn, grow, and perfect yourself. Imagine a tree. You plant it today, but you cannot expect it to bear fruit tomorrow. A tree needs time to take root, grow branches, and eventually, one day, bear fruit. The market is the same. You cannot rush it to yield profits, but if you nurture it the right way with patience, discipline, and long-term thinking, it will bring you more than you ever expected. A story I once heard about a potter comes to mind. He spent his entire life perfecting his craft. Each pot he created was the culmination of decades of learning, mistakes, and continuous improvement. A young apprentice asked him, "Master, how can I create pots as beautiful as yours?" The master replied, "Learn to love broken pots, because they are the ones that teach you how to make a perfect one." Trading is much like pottery. Every losing trade is a lesson. Every time the market goes against your expectations, it is an opportunity to understand more about how it operates. You shouldn't try to avoid these challenges, but embrace them as a necessary part of the journey. And when you think long-term, you won't be pressured by short-term losses or profits. Because you know that success doesn't come from winning every single trade, but from building a stable system that can endure over time. A long-term thinking also helps you escape the trap of greed. When you set realistic goals, you no longer feel the need to get rich immediately. You focus on improving day by day, trade by trade, and plan by plan. And the magical thing is, when you stop obsessing over profits, profits start finding their way to you. Ask yourself, what is my goal in this trade? If the answer is simply to make quick money, then perhaps you're not ready to step into the market. But if you say, I want to learn, improve my skills, and build a sustainable system, then you're on the right track. A farmer doesn't plant seeds and immediately dig them up to see if they've sprouted. They know it takes time for those seeds to grow. Trading is the same. Don't measure your performance by each day or each week. Look at longer time frames: a month, a year. Evaluate your progress by how you handle risks, manage capital, and maintain discipline. Profits are merely a byproduct of those efforts. If you can now sit in front of your screen, watch the market without being tempted by short-term movements, then congratulations. You've overcome one of the biggest challenges in trading: patience. And if today you feel like you've grown, no longer overly worried when the market doesn't meet your expectations, then you've achieved something very few traders can. The trading journey is not easy, but it is worth it. Because it doesn't just teach you how to master the market, it teaches you how to master yourself. You are not just a trader, you are someone learning to overcome pressure, learning patience, and above all, learning to make trading a meaningful and enduring journey. Keep moving forward, one step at a time, on this path, because what awaits you ahead will far exceed what you can imagine. The trading journey, like every meaningful journey, is not about the destination, but about how you grow with every step. Each decision, each lesson, and every time the market challenges you is an opportunity to understand more about yourself. Success doesn't come from how much money you make, but from how you've honed your mindset, resilience, and patience. Remember, trading is not a race where the fastest to get rich wins. It is a playground for those who remain steadfast, focus on the bigger picture, and accept that today's difficulties are merely stepping stones to tomorrow's success. Don't let greed or fear control you, and never forget that failure is not the end, it is a necessary part of growth. If you've come this far, be proud of yourself. You are building not just a career but also a stronger version of yourself. Continue to maintain discipline, keep learning, and move forward with confidence. Because as long as you don't give up, every day you're getting closer to becoming the successful trader you've always aspired to be.